Palantir stock is getting absolutely pummeled here today, down over 14 percentage points. So at the top of this video, we're going to talk about Palantir for a moment here. Thought I'd share my thoughts and opinions kind of on the stock today, okay? Then I want to get into this little 1-minute clip from Brad Gerstner of Altimeter Capital speaking about the future of Tesla. Then we'll get into this one, Stanley Druckenmiller, legendary investor, speaking about AI, his expectations long-term versus short-term. Then I want to get into this one, talking about headwinds facing Starbucks. Obviously, Starbucks stock has just gotten pummeled for the past year or so, so we'll speak about that one. And then we'll get into this one, Apple reportedly developing AI chips, which I'm looking very interested to get into that one, okay? Appreciate y'all joining me. As always, hit that like button. Make sure you're subscribed here to the channel. New all-time high subscribers in the history, folks, 44,400 plus now, okay? So, Palantir, stock getting pummeled here today, down over 14 percentage points, right? So, a few things to kind of keep in mind, I think, that are important in regards to Palantir, okay? First was, before we even get into valuation, those sorts of things, and some of the other things, shaking things up, the numbers were phenomenal. There's no way you can look at those numbers and not say that's phenomenal. Their balance sheet is as pristine gets. Their income statement is improved so much. It's insane. They're now making over $100 million a quarter in net income. Their revenue is obviously flying up 21%. That's even despite government business being weak right now, right? Which is kind of out of their hands. Government's going to be weak. Government's going to be weak, right? If you look at their commercial customer count, everything's going great. Conference call was very solid last night. There's no holes in the business. Everything's very good, right? But with that being said, when you are a stock, right, that essentially has a higher valuation on it, sometimes your expectations get so over the moon, right? And so that's why I told you guys in yesterday's video, if we saw like a 25% plus revenue number, you know, we would have been flying up today, right? But it came in at 21%. So 21% is not 25%, 26%, 27%. So that could lead people to, the shorter term people to say, oh, the momentum's not there in Palantir, right? Because we didn't see some epic number that people like blew people's mind, like, oh my gosh, can you believe Palantir grew at this type of rate? And so as a long-term investor, you would have loved everything in those numbers. But as a short-term, more momentum swing trader type person, right, you're going to look at those numbers, you're going to say, yeah, business is good. It's a little better than expected. They beat revenue, but it's not that outstanding to push this stock up to $25, $26, $27 here in the short term. Now, me, how do I look at it? Well, I look at it very simply. I'm a long-term investor. Everything's headed in the right direction, exactly where I want it. And so I like everything that's lining up here. And it's irrelevant. Palantir could be 21 today. Palantir could be 27, 29, 32, like 26, 50. It doesn't matter. It doesn't matter to a long-term investor like me because I'm not selling the stock today, regardless of what price it was at. Well, maybe if it was at like 55, I might sell some shares today or something like that. But nowhere even remotely close to these prices or am I even interested in selling. So it's really irrelevant in the end, right? And so that's just kind of an important thing to remember about these stocks. By the way, 1000X, baby. We just got them in. Just arrived in my house. The membership cards. Oh, yeah. The membership cards arrived. Founders Series, folks. So if you want to be one of the folks in the Founders Series, 1000X, once you join, we send you one of these in the mail. Ooh, that's nice. That's nice. What do you like better? 1000X cards or your private group cards? Both are pretty cool, man. I don't know which one's better. But anyways, alrighty, guys. So let's go ahead and react to these other clips here that we have. Mr. Brad Gerstner up first in regards to Tesla.
Speaking of driving, autonomous driving and the like in Tesla, which you revealed on our program the last time we spoke, what takes it from a quote-unquote small position to something larger? What do you need to see from Elon and that company from here?
He's all like, can you tell everybody to shut up in the background, please?
Well, first, let me say, I think Elon's done an extraordinary job, and I think his advantage in AI and full self-driving relative to all the other manufacturers in the world is deeply underappreciated. I described FSD-12 as a chat GPT moment for self-driving. After 10 years of marginal improvements, we had a profound breakthrough around the imitation learning of FSD-12. I think that will be an incredibly valuable asset to the company. I don't think it's an asset that can be replicated by other OEMs in the United States. They simply lack the data. And this is data in, pixels in, and control plane out. So unless you have the data, you're going to have a very hard time catching Tesla in full self-driving. I don't think BYD is going to be able to, play in that game either. And I thought it was fascinating. At the moment that the United States is banning TikTok, that the Chinese government is providing permission to Tesla to do full self-driving in partnership with Baidu in China. It shows the resilience and the strength of the relationships that Elon Musk has in China and that Tesla has in China, and their own push toward AI. So I think, you can't think of the company as an auto company. You have to think of it as a technology company. Today, we think that it's, fully valued. It's been a volatile ride. But we think this may be one of the companies that can break through on energy, can break through on AI and FSD. And so we're paying very close attention, because if we start to see the adoption and the conversion on FSD that we think is possible, this will be a story like Apple and services, where services becomes an increasingly important part of their profit makeup.
Boom, boom, boom. So important what he just said right there. So important. He talked about Elon Musk's relationship in China with the top dogs, right? And his relationship's phenomenal, and that can never be overstated. Like that needs to be talked about. I think that's when you think about the biggest market for Tesla long term and even short term, it is China. It's much bigger opportunity than even the United States is, right? And even than all of Europe is. And so when I look out there, I say, I like that Elon Musk has a great relationship with those folks. And I can tell you, folks in China, they have a lot of respect and admiration for Elon Musk. I mean, a lot. I think a lot more than even a lot of Americans do, just to be quite frank. They have a lot of respect for him. They look up to him. They think he's a brilliant genius. And that's something China's done for a while. They had so much respect, I remember, for Steve Jobs back in the day. If you didn't know, Steve Jobs, he was the one that was in charge of Apple back when Apple really went into China and really built out that relationship in China with Foxconn, and to really start developing the phones over there, and in terms of being built and whatnot, and all those sorts of products, right? And so they had so much respect for Steve Jobs back in the day. And so they really looked to these sorts of folks that are the innovators, that are kind of the game changers, that are like the leaders of future technologies, and they really have a lot of respect for them. So yeah, I don't think that gets talked about enough, just to be honest, right? Alrighty, next one up here. Legendary investor Stanley Druckenmiller speaking about AI and maybe some other subjects.
Sort of came into play with that discussion, because you're worried that it's going to take a lot of investment and there's no savings. We got to build up the defense. There's wars everywhere. And you were early with NVIDIA. You were early with AI. You pared back a little bit, but are not less bullish on the prospects for it, are you?
Well, first of all, I wasn't early with NVIDIA. My young partner was early with NVIDIA. He called me in the fall of 22 and said that he thought all this excitement about blockchain was going to be far outweighed by AI. And I asked him how to play it, and he told me I should buy this company, NVIDIA. I didn't even know how to spell it. I bought it. Then a month later, ChatGPT happened. Even an old guy like me could figure out, okay, what that meant. So I increased the position substantially. I said in an interview in June of that year that I expected to own NVIDIA for 2 or 3 years, that this was a mega trend like I'd never seen, potentially bigger than the internet. But when the stock went from 150 to 900, I'm not Warren Buffett. I don't own things for 10 or 20 years. I wish I was Warren Buffett. And 150 to 900, yes, we did cut that position and a lot of other positions in late March. I just need a break. We've had a hell of a run. A lot of what we recognized has become recognized by the marketplace now. Powell was We expected Powell to come back and repivot, which he subsequently did. But no, long term, we're as bullish on AI as we've ever been. You just wonder, if we were all sitting here in 1999 talking about the internet, or anybody was talking about it, I don't think anybody would have estimated it would be as big as it got in 20 years. We didn't have the iPhone, we didn't have Uber, we didn't have Facebook, yada, yada. And yet, if you bought the NASDAQ in 99, it went down 80% before that all came to fruition. That's not going to happen with AI, but it could rhyme. AI could rhyme with the internet as we go through all this capital spending we need to do. The payoff, while it's incrementally coming in by the day, the big payoff might be 4 to 5 years from now. So AI might be a little overhyped now, but underhyped long term.
You said you're not.
So, very important what he brings out there, and he could be accurate with that. But I'll say this, okay? The big difference, in my personal opinion, in regards to the situation, is now all these big companies have seen the stakes, right? They know what is at risk here, okay? They know business models can be disrupted very negatively if they don't spend on this stuff. They know that if they capitalize on this, these are, hundreds of billions of dollars opportunities, trillions of dollars opportunities, and the internet really taught us that, right? And so that's why a lot of these big dog companies, they can't really pull back on their spend. They have to actually keep increasing the spend with, at the end of the day, it's NVIDIA, right? Because they're the big dog in the space. And if you want to take this stuff serious, you better be buying NVIDIA chips. And so that's the one differentiator. I think in the internet boom, we hadn't really seen something come along that was such a game changer, right? Now every business leader out there has seen, oh my gosh, if only I had invested more into mobile technology, into, a lot of different spaces, social media, those sorts of things, right? File sharing, video sharing, the cloud. I mean, now everybody's kind of seen it. And so now everybody's kind of seeing the next opportunity, which is AI, and they're saying, we can't miss this, especially if it's a longer term focus for person. If it's a kind of an older CEO who's kind of just a traditional CEO, they might not care as much, right? Because they're just there for the next, couple of years maybe. But if it's a longer term CEO like a Zuckerberg, for instance, or an Elon Musk that is planning on leading their companies for the next 10, 20, 30 years, those people look at it very differently because they're like, we're going to be around as the big dog still when these things are coming to fruition. And so it's a different viewpoint there. So I don't know. I think he brought up a good point, but I do think there's some key differences.
Warren Buffett, but what you just did with NVIDIA sounds an awful lot like what he did with Apple. He pared his position in Apple by 13% and then went on to say it's a better company than Coca-Cola or American Express or any of the other companies that they have in their portfolio. And he thinks Tim Cook is great.
Yeah, well, I will be very surprised if I don't own NVIDIA on and off the next 10 years.
You're so bullish on AI that, Andrew, you did a great interview with Perplexity, and I think that's where you decided might be a place that you want to be.
I love Perplexity. Again, a funny story. My young partner, the one who has basically been behind all our AI play with his staff, he told me, I don't know, in January, that all the kids on the West Coast weren't using ChatGPT or Google anymore. They were using this thing called Perplexity AI. So I, of course, tried it out, and it was just unbelievable. It's an answer machine, but the speed, but the depth of the answers and the quality, and then the fact that they give you the sources if you want to go deeper, it was nothing like I've ever seen. If you don't believe me, just ask ChatGPT, Gemini, and Perplexity a question and get the answer, and you'll see exactly what I'm talking about. I fell so in love with it. We tried to get in on a round that we were lucky enough to be accommodated. I love the founder, Aravind Srinivas. He's super aggressive and with his team super innovative, but he's also got humility. He's everything we love in a founder. So
okay, so the important thing to understand whenever you got a new technology like this is you want to be in more of the obvious winners and not take as much risk in the maybes, right? So even ChatGPT, I'd say is a maybe. Like if there's maybe ChatGPT is the next Google, or maybe it's the next Yahoo search, or maybe it's the next Ask Jeeves for any of my OGs out there. You remember Ask Jeeves back in the day? Like we don't know, right? Maybe this Perplexity thing is actually the next Google, or maybe it's some other service. That's we don't know. So you want to bet on the obvious winners in a race, right? So the obvious winners to me in AI, there's a few companies that are so obvious to me. One is Meta. Meta is clear as day an obvious winner in AI. Not just from what they're doing with the llama models, but for what they're doing in regards to serving up videos, images, things like that on Instagram, Facebook, that are things that you know you're going to engage with, right? And so the AI being trained better and better and better to know, okay, they don't want to see this, they want to see this, they're going to engage with this, those sorts of things. That is extremely, extremely valuable. So Meta's an obvious winner to me. Another obvious winner to me is NVIDIA. NVIDIA is a clear as day winner. Like there's no question about that, right? Like they're going to continue to sell the shovels. They're going to continue to sell the shovels to everybody trying to dig for the gold. And so they're a clear as day winner to me. And then if we look outside of that, another clear as day winner to me in regards to AI is, you know, the company. We spoke about it at the beginning of this video, Palantir. Palantir is another clear winner. They've been working on this stuff for much longer than, you know, it was a buzzword that was out there. And if you look at their numbers, it's very clear that they're a winner in this space long term. And so, you know, those are some of the ones that just come to my mind that I'm like, oh, these are obvious, like winners long term. And there's a lot of other companies that I'm like, maybe, but it's a maybe, right? When you're making investments, it's much easier to make investments, especially if it's big money investments in things that you know are for sure's, rather than maybe this is the next big thing, because maybe it's not as well, right? So just a little food for thought in regards to that. Alrighty, next one up here, Starbucks. So Buc-ee's has been getting wrecked. It is on my possible buys watch list. Let's check out my possible buys watch list here. So where are we at here for Buc-ee's? There it is. Buc-ee's 72 today. Whew. I mean, it's flirting with literally, if the S&P 500 just got hit, like let's say the S&P 500 went down like 3 to 5% over the next few weeks, like, you know, Buc-ee's is easily in the 60s, if not mid 60s at that point in time. That's incredible to think, right? So, you know, it's getting pretty darn interesting. I'll say that.
Professor, author, and leadership expert. Gautam, great to have you with us. I want to get straight to that issue of the protests because it's an interesting one. I mean, we can, you know, see that maybe consumers don't want to pay a lot for coffee, you know, all these various obvious reasons. But in terms of the protests and how the company has handled them, what's your take?
So Starbucks got caught in the protests for just a fluke occurrence where their union used their logo and they sued them. And it's sort of, they really haven't taken a stance one way or the other. If I were their management, I'd kind of look and like, what did we do to deserve this? Seems like a fairly reasonable response to that. But if the protests are the driver of the boycott, of the cuts, and I'm a little skeptical about that, that's the best possible story that management can tell, because it means this is going to go away. This isn't about deeper underlying operational problems. That means that the stuff that Howard Schultz has said is actually irrelevant to their concerns, and everything will be fine in a quarter.
That's a good point.
I'm not persuaded by that story. I do want to sort of pause and sort of have a moment of sympathy for Lakshman Narasimhan. Doing anything with a backseat driver is hard enough.
Yeah.
Leading with a backseat driver who has a James Bond-style eject button to fire you out of the car and has used it twice before
right.
strikes me as a somewhat interesting leadership challenge. When I'm teaching that in class, I think my students would have some great things to say about that. Mm-hmm. But the basic question that we should be asking, if we assume that whatever happens with the boycotts will end reasonably soon, is Schultz right? And I think that's what we should be focusing on. So I was curious about that. So on my way to the studio, I walked into a Starbucks and I looked around to see, like, what was my take? This is on 6th Avenue in Midtown, presumably a pretty high traffic and important location for them. There was trash on the floor. It looked dingy. The signs were not hung up straight. And if there was any sign that the employees really cared about the appearance of the place, I could not detect it. It seems to me that that's a...
Boom. All comes back to operations and how well you're doing running your business. So what it all comes back to. If you're not doing a good enough job, customers won't come there. And you can blame it on this, you can blame it on that, blame it on everything. At the end of the day, if you got a great product, people are happy with that product, right? They're going to keep coming back. And when the market gets more competitive, if your competitor across the street's doing better, you're going to lose. You're going to lose.
One data point, but it's still pretty telling that they are having some bigger operational problems that they should be thinking about.
So is it as easy as Schultz says, go into the store, be closer to the customer, it's all about the store as opposed to the data? I mean, do you get that sense? I mean,
it's never easy. I think when Narasimhan came on, it was actually quite admirable, the extent to which he really went all in to become a Starbucks person. In fact, he still spends half a day working in a store as a barista. I would not want that job. So, good for him. that tells us a lot about his dedication to the culture of the company. But at the same time, he is an outsider, and it's always harder for outsiders to process in this way. This is actually what my books are about. And it can be hard for them to acculturate into that environment in a way that an insider would. Schultz has chosen 3 successors. The first 2 didn't work out that well, and they were also outsiders. So I want to ask this question about what's going on there, that this keeps happening to him.
At the same time, maybe you want somebody from the outside. I mean, maybe you do maybe in this case, you want somebody to be from the outside and walk into a store and say, this store is dirty. It used to be clean. Where has this company...
Okay. As somebody that was in operations for a top dog company, Quick Trip, we dominated that industry. And we were so far superior versus our peers for many reasons, right? And we were able to pay, 2x what competitors are paying. So, if a manager at another gas station was making 30 grand a year back in those days, we were making 60, 70, 80 grand a year, right? So there's huge key differences, right? If you want to go that route, you have to go all the way throughout the culture. But if you're a public company, the problem is you're going to hurt profitability in the short term. Because you're going to put new roles in place, you're going to put new systems in place, new bonus opportunities in place. Like at Quick Trip, the amount of different bonuses we had was ridiculous. We had secret shoppers that you never knew when they were going to come in or who they were, that would shop your store and see exactly what was dirty, what was clean, go throughout the entire store. And, there's thousands of people that visit the store a day. So and these folks were so good, you had no clue when they were, who they were, and you had certain things you had to say, all these sorts of things. It's a big process. And it's very expensive because now you're having to hire professional secret shoppers, right, that are on payroll. Now you're having to have bonus programs, for the employees, so they're, incentivized to have that. And then the management even gets bonuses based upon, how well the scores came in and things like that, right? And so those things help immensely long term. But man, do they hurt you in the short term. They really hurt you in the short term. They hurt your numbers significantly in the short term if you were a public company doing that, because it's a lot of cost. It's a lot of cost, and it's a lot of changes, and it's more people you got to hire. And man, it's difficult, right? It's really difficult to pull that off. And so, as a public company, I could tell you if Howard Schultz came in back in Starbucks and said we're going to, enact these different policies and, it's going to hurt EPS by 20% over the next 2 years, I think people might go with it. But when you're some CEO like this, you can't just have your EPS go down 20%, right? And so that's where you get in this kind of tough situation where it's like, how do we handle this situation? Because Wall Street's not going to want to see our EPS down 20-25% because we enacted all these new policies. But at the same time, they want to see better numbers. But if we want to do better, that's where it gets tough, man. And that's where, with those sorts of tough calls, you need to be a big dog. And when I say a big dog, you need to be like a Zuckerberg. You need to be somebody that has so much ownership in the company, you have so much pull that people are like, okay, he's going to fire a bunch of people, we're going to go with him, or he's going to make this move or do that. You got to be an Elon Musk type fella or a Howard Schultz type fella, right? And so I don't know, maybe Schultz has to take back over Starbucks. Maybe he has to put himself back in position and then go ahead and get the changes done that are necessary. But it's going to hurt EPS. There's no. If you're going to make the operations better, it will hurt EPS in the short term. It will help EPS huge in the long term. If you think about 10 years, those sorts of different policies you put in place will help immensely. If you're thinking about the next, year, 2 years, it's going to hurt bad.
Wrong as opposed to somebody who isn't. I mean, I don't know, when you want to clean up a company, oftentimes an outsider is brought in.
So outsiders are change agents, right? And the question that I would ask myself when I'm debating whether to bring an insider or outsider, because change is always a high variance process, right? You could do very well or you could very poorly, but change is going to drive up your variance and outcomes. Is when they brought him in, did they really feel that Starbucks needed a change? Or was continuing on with their strategy and their approach and just honing what it had already done the right approach? When Steve Jobs replaced himself, he didn't pick a change agent. He picked Tim Cook. If you were an Apple shareholder, I think that worked out pretty well for you.
Right.
You know, if you look at what happened with Starbucks, it was the pandemic had a lot of overlay over it. And I think that's a lot to blame for the workers' morale and everything else, because people were out of the offices. People didn't take the pride in where they worked. And to switch it up, they had to go strong into digital. And now we look back on it, Starbucks was the premium brand. You paid for that experience. So what saved them during the pandemic is hurting them now. Isn't it a case for all of these restaurants? Starbucks might be the poster child for it.
Yeah, it's definitely true that sort of high-end consumption, things like that, are being hit. I heard you talking about McDonald's earlier. We can go down the list of different places that are doing that. It's not a short list. They seem to be hit worse than others. And some of that is definitely fluke stuff. I used to live in China. You spend time in China, and Starbucks is very popular, but you can see challengers to Starbucks that have advantages and that do not have the overhang that Starbucks' close association with the United States is going to cause you in the Chinese market and in other markets too, right at the moment. So I wonder if from Starbucks' case is that they could say, well, we're just getting a worse deal than everybody else because of those things. But again, that is not, right? That's not Schultz's argument at all. He is focused entirely on operational problems. And operational problems are an indictment of a leadership team that has not been around in charge of the company for that long.
So as an expert in leadership, right, and you mentioned...
Here's the deal, okay? If you want to think about, could this current Starbucks CEO get fired, be ousted from the company? My opinion is, if this stock goes under 65 and they report another bad quarter, I think there's a real possibility he could be ousted from the company. And they'll put maybe Schultz back in place or somebody else. It could be Schultz coming back, though. Because Schultz, he got out of Starbucks because I thought he might go political. I thought he might make a run to be president. But it doesn't seem like he's going that route. And so what is he doing? Dude, what are you doing? Just chilling? You might as well get back to work. Come on. So that's my opinion. Another bad quarter, stock goes under 65, and I think the board of directors will say, hit the road, mister. We got somebody else coming back in, and at that point in time, it might be Schultz.
Just one of the things that really caught my ear. Change is inevitable, right? Yeah. And when you're a leader, isn't it part of your task to be able to train the next person that's going to lead in the manner that you want, or at least have, the wherewithal to make a determination about the correct direction of the company going forward? So for me, is this just an indictment on new leadership, or is this also an indictment on pre-existing leadership's inability, because as you said, this is the third time now. It's the third iteration of choosing someone and having it not fail. So that seems to be the common theme throughout this. What's your take there?
The fundamental task of any leader who thinks of themselves as a steward, as opposed to just someone who's squeezing the last drop out of the institution, right, is to hand it off to someone else in better shape than when they found it. Now, whatever shape Schultz hands Starbucks off in, it's in better shape than when he found it, given his extraordinary track record as a CEO. But yeah, he's got to look in the mirror and say, how come if he is not happy with this team, he chose this team. How come this keeps happening to him over and over again is a serious concern. And at that point, you would say, maybe it's time for the board to step in. Because not in sense of pushing out the CEO, but in saying that, Howard, you have a lot of amazing skills, but maybe picking a successor isn't one of them. Yeah. And it's time for us to take a larger role in that.
Exactly. 100%. 100%. And let's say Howard did come back again, okay, and he decided to be CEO again. Okay. I think the best thing for him is to have somebody work right underneath him for that 2 years, 4 years, 6 years, whatever. And that's like your general that's just working underneath you day in and day out. And they're doing everything. They're going everywhere with you. And so that way, they've been with you for several years, seen the way you operate. And when they take over, it's just a very seamless transition. It's not like, we spent a month together, 3 months. I'm talking years. Spend several years together. See exactly how they operate. And then play a little good cop, bad cop. Have that one underneath you kind of be the bad cop. Have them be the one that's rough and very, very demanding on the folks that are underneath. And then have Howard as CEO, kind of be a little bit more of the good cop, right? He's a little more friendlier in those sorts of things, but the one underneath you, like, he's the hard driver. So, yeah, that's my opinion, man. Alrighty, next one up here. Apple reportedly developing AI chips.
Data centers, according to the Wall Street Journal. Deirdre Bose is taking a look at the AI chip arms race for today's Tech Check. Morning, Dee.
Good morning, Carl. I know you're going to like this name. It's apparently codenamed Project ACDC for Apple chips in data center. And here may lie Apple's advantage in the Gen AI race. This company has the most experience and success in designing its own custom silicon, even if it has been a laggard in terms of laying out that broader AI strategy to investors. At the Apple event in Cupertino this morning that Steve was covering, the company debuted its latest M-series processor, the M4, which it called a, quote, outrageously powerful chip for AI. But AI chips for data centers, that's a different beast and an unproven area. And while that M line of silicon has improved power efficiency performance across Apple devices, Apple has struggled in other areas like developing its own cellular wireless chip to replace Qualcomm silicon. Now, the journal reports that Apple's working with Taiwan Semi on a server chip that runs AI models. So that's the inference part of AI versus training. But if that is successful, that could give Apple more control over its AI products and ambitions when it does lay that out, expected at WWDC in a few weeks. Now, as we've discussed, nearly all the mega caps are trying to develop their own Gen AI custom in-house chips. It's about cost and efficiency and countering NVIDIA's dominance. Billionaire investor Stanley Druckenmiller talked about Gen AI and trimming his NVIDIA position on Squawk this morning.
We've had a hell of a run. A lot of what we recognized has become recognized by the marketplace now. Long term, we're as bullish on AI as we've ever been. The big payoff might be 4 to 5 years from now. So AI might be a little overhyped now, but underhyped long term.
So he just trimmed his position. He said he wouldn't be surprised if he was holding on to NVIDIA for the next 5 to 10 years in some way. But to that sentiment, that longer term sentiment, of course, nobody's close to replacing NVIDIA GPUs anytime soon, but Apple and other mega caps, other chip makers too, they're playing the long game here. Silicon is a very key piece of that strategy, and that will power their apps and products, which is ultimately what they're looking to make, Carl.
Couple of reflections. One, I was fascinated by Druckenmiller's answer that he can't imagine not owning NVIDIA on or off for the next 5 to 10 years. And then just a reminder that Apple's only been in the chip business for, what, a decade maybe?
Only, yeah, but I mean, it's a bit of a head start over some of the mega caps. This is true, but I mean, you look at the success that it's had with that M series, right? And how it's made improvements across iPhones and iPads and even the laptops. Apple would tell you that it's been working on AI chips for a long time as well, but this is where it's been a lot harder, right? We talked to a lot of the different mega caps about the chips they're making, Google's TPUs in-house, and they say that they're getting better and better, but I think the real test is who's using them, right? They're all being used inside of their cloud infrastructure. Can you use it for inference? Can you use it to build the foundational models? The race is happening at this level, and that is going to set the ground for the race when we get into the app and the products, which everyone's sort of looking forward to.
Okay, so, you know, it might seem like, oh man, all these companies, all the big techs are trying to make their own chips. Isn't that a huge competitive threat to NVIDIA? Not really. Because at the end of the day, all these big techs, and I own several of those big techs, right? You can't just like say, we're going to make the NVIDIA chip and we're going to make it better. Like, it doesn't work like that. It's like NVIDIA saying, we're going to be social network. We're going to create the next Facebook, and we're also going to create the next Microsoft Office products and the next AWS, and we're also going to create this. Like, it doesn't work like that, man. Like, NVIDIA has such a huge advantage over all these guys. And Tesla's got arguably the best engineer team in the world. And they've been trying to, you know, make their own chips for years. And at the end of the day, look what they're buying. Look what Elon Musk is talking about on the conference call. NVIDIA chips. They're buying as many as they possibly can get their hands on. 35,000 they got right now. Elon wants to have 85,000 of those chips by the end of this year. You know, you can try to do it, but you can't duplicate it, okay? All right, guys, appreciate you joining me as always. If you're looking to get on the wait list for 1000xstocks.com, go to 1000xstocks.com, join the wait list there. And we got monthly memberships and yearly memberships. Once you join in there, we're going to send you your Founder Series card in the mail. The nice Ooh, steel, baby. Very nice. All right, guys, appreciate you joining me. Much love and have a great day.